Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today's Tuesday, October 1, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Quite interestingly enough, if you hearken back to last night's video, we talked about the very spot represented by the blue horizontal trend line at 565.17. What does that represent? Well, that represents the area where she broke out from a prior high, and it now represents an area where there's generally a bull-bear battle. Today she came up slightly short, but inside of that, closing intraday candles below that, and then certainly daily below that, opens the door for the gap left open, and that was left open on Wednesday, September 18th, and it happens to coincide with home base. What's home base? The 20-period moving average. It's all funny how this works. We do have a couple of catalysts on the board today. Might as well bring them to the forefront. We have Iran firing missiles at Israel. Anybody thinks Israel's going to sit by and not retaliate is smoking something. So this is definitely escalating. This is a long time coming. I think it's time for Israel to do some damage and teach Iran a lesson that they need to learn. That's basically my simple prediction of what's next. We also have the east coast of the United States port issue going on. What does that mean? They went on strike at midnight, October 1 today, and trade will come to a screeching halt on the East Coast and beyond shortly. If they resolve it within a couple of days, nobody will notice the impact. If it goes on a couple of weeks, you're going to notice the impact. It's very simply, where's my stuff? Everything from food to cars and everything in between is going to be impacted. What comes in and goes out of the port? Everything. There's something like 30 ports or so up and down the East Coast from Maine to Florida, I assume. So once again, we have no shortage of items to pin a sell-off, a down day, a down market, a corrective move, any of those things. We have no shortage of things to pin it on. If somebody was to ask me, hey, Dave, let's say this 565.17 doesn't hold, what is the next spot as far as you're concerned from an automagical calculation perspective and all that stuff? Good question. Write it down, put it on a sticky note. It's not that far under the gap, just a stone's throw, a chip shot, 560.50. It's a give or take. Not to say they can't get below, but that's an area I would expect them to have a reaction, a bounce, a bull-bear battle. It's an important spot, and it's F, capital I, capital F, F sooner than later. If we're talking about 560.50 a week and a half from now, it's not the same as if they hit it a couple of days, within a couple of days of now. For now, let's just say this week. 565.17 is still important. They didn't hit it today. Doesn't mean they won't hit it tomorrow. And if they get below, that's going to open the door for the gap and the 560.50, give or take. Write it all down. Put it on a sticky note. Big picture, this is just a pullback in an uptrend. Nothing more, nothing less. You put it in perspective, and this, the weekly chart, is in a pretty firm uptrend above all the weekly averages, the moving averages. The trend is your friend. In the midst of the uptrend, I'm saying there's a likely buy opportunity in there. I'm going to give you the summary. We're going to highlight a few important things. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. The early notes specified some things up north, and then we also had some stuff down south. For whichever way they went, they were rather quiet in the overnight session. Let's focus on this right now. The first place, meaning of support, sits down at 572.25, and then the next place down in the sequence is 571. We'll focus on there first. That's what it looks like on a 5-minute chart, where right of the vertical is today's activity. And frankly, that trade, that first opportunity of the morning trade for the bounce back in the other direction, frankly, just didn't work. Yours truly included. We had traders that took a hit on that trade. I said if they start getting below 570.50, it's going to be no good. They started getting below 570.50. We pitched it. It was no good. But wait, there's more. And this is where, again, you separate certain traders from other traders. Can you actually look past a bad trade? Because they're going to happen. I told traders in the live room today, there's going to be another one. There's always going to be a bad trade here and there. This is part of the business that we have to learn to accept. Okay, so let's move past that. If we can keep our losing trades small and fast, then we can move on and accept them for what they are and go on to the next trade. The big challenge is this. Do you have to wait? Do you mentally, emotionally have to wait till another day to take another trade? Or are you the type of person that trades mechanically and says, whether the next trade comes in 5 minutes or 5 days, I don't care which one it is, the next trade is the next trade. And guess what? The next trade has nothing whatsoever to do with the trade I just had. Mrs. Market doesn't really know about the trade I just had. Mrs. Market doesn't know the trade I'm going to take. Mrs. Market doesn't care about you, your neighbor Jimmy, me, cousin Fred. It doesn't make any difference. The market is indiscriminate. Therefore, we trade mechanically. The next trade is the next trade. It's not easy to do. However, it is something we have to work on. So I'm going to scroll up again, pause the video, read the notes, go back to the chart, and double check the work. What we're saying here, I'm summarizing, is if they get below 568, we have it was actually 568.07, I believe. We have an opportunity for a spike the low and rip it back up in the other direction trade. That next place, that next opportunity is at 567.25. And there it is. On a continued sell, there's a spike the low and rip it back up opportunity. Below 568.07, there's your 07. Opens the door for 567.25 down to 566, which is a support zone and a bounce back place. Just like the first trade of the day that didn't work was. What are the odds 2 in a row aren't going to work? I don't have those odds. This is the next trade. We had plenty of traders took the next trade, made up for the first one. And here's what it looks like on the 5-minute chart. And low of day was exactly what? 566 even, dead on, balls, accurate. And what did I tell traders in the live room after all that happened? I said, if you're holding a trailer, you can hold it because they can, don't know they will, can still get back to 571 all the way up here. Now, they tried at the end of the day, but they really tried to make a test, or at least had a test of the low. They made a higher low. Then they started up, recaptured some stuff, made an attempt for 571. But from down here, our initial target was 569.25 to 569.50. Here's your 569.25. We'll put it on 25 on the nose. And that was an exit target from this particular trade down here. Got a trade at 567.25. Got a trade at 566, and some traders just got all of it. We call this one the get back on the horse trade, and it's very hard to do. I get that. It's a learned skill. You have to be able to get back on the horse after taking a loss. It's very important. It's no different than riding a bike. You have to get up and get back on and keep going. That's the only way to survive. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything you need for the S&P during the trading day, whether you're trading options, futures, options on futures, exchange traded products. They're all directional trades. What else do we have? We had a couple stocks on the move today. We had Zim, which is in the shipping category. That was getting hit because of the port shutdown. And then we had Boeing, took off in the other direction. So Boeing was off the board. Let's take a look at Zim. You saw the number entry was 23.52, pardon me. They came into it, they spiked it, and then they ripped it back up in the other direction, and then they grinded higher for the remainder of the day. All in all, pretty good rip out of the chute is about a 2% pop on an intraday scalp with potential. We're going to take a 2% pop and say that was a nice trade and move it along. The numbers work. What's going on over in camp IWM? They came in to test what? The 20-period moving average, home base. Didn't we talk about this last night? We talked about Wednesday's low. Don't give up Wednesday's low or that could cause a problem for the bulls. They almost gave up Wednesday's low, but they did rally back. This is one day. This is on Tuesday. We don't know what's going to happen beyond, but they did rally back today to close inside Tuesday's low. They know that's important. Now we know that they know that that's important. Today was a test of the 20-period moving average and a ricochet back. Big picture, above all the moving averages, technically nothing wrong with the weekly chart whatsoever. Above trend, above all the moving averages, trend is your friend. Similar routine for the folks down at the transportation department. Above all the moving averages, nothing wrong with this tape. But what you could see here is, ran a test of this breakdown candle high. Now what you'll also see is, can't stay above it. Now coming down. The moving averages are below price. If she stays above all the moving averages, that is the dominant thing. But you can't discount the fact that she ran a test of a breakdown candle high and now has not been able, as of yet, has not been able to stay above. There are no accidents or coincidences. Above all the moving averages, she's bullish. Below the moving averages and a recapture inside this trend line again, that's going to spell trouble for the transports. You clear up the noise a little bit and you look at the weekly chart and you say, hey, is there anything wrong with this particular chart? And you say, no, they're breaking out above this triangle, period, full stop. It doesn't matter that today was a down day. Doesn't come up in the rounding on a weekly chart. Now, what about the Q people? Again, it's a down day, 1.39%, $6.80. That's a pretty good down day, but what did they do? Well, they tested an important place. What is this place? That's the entrance to no man's land. It's the one we were talking about in the spiders. When you go back to the daily chart here and you get rid of this line so you could see, same entrance place to no man's land. They just didn't get there today. They didn't get all the way there. That was the 565.17. So today the Qs got to their place. Get below, intraday, close candles below, 5-minute, 10-minute, 15-minute, hourly, half-hour, 2-hour, 3-hour, daily candle below. And what are you? You're into these moving averages. You're filling a gap down here at 470, 471. Now, if you asked me on the Qs, where's that price? Is it below the gap? Is it the gap? Where's that price where you're expecting a bounce back in the other direction? Get out your sticky notes. 468.65, right into the convergence of the 50 and the 100 period moving average. That's not the reason. That happens to coincide, which gives it additional importance, additional juice. 468.65. And this is same as the spiders. This is like a this week type of thing if they're going to do it. Financials, anything going on here? They got some kind of a bearish situation going on, a little bit of a bear flag situation. You could make a case that they're building energy to make another run higher. 44.30 is a number, and then you have the 50-period moving average below that. Again, they're not going to get too far on the downside as long as they stay above 44.30. Start closing candles below 44.30 and below that 50-period moving average. That will change the tune. For now, 44.30 is important. It is somewhat of a pivot-ish situation. Above, she's bullish, big term, long term, big picture. Below, she turns somewhat bearish. Write that down, put it on a sticky note. And what about our canary in the coal mine-ish for the tech sector from last night? Smashmouth was down a couple of bucks last night or whatever it was. It was down a little bit. And we said, hey, you got to heed that because that's a proxy for the tech space. And if the tech space is going to come down a little bit, everything else is going to come down a little bit. And here we are again with Smashmouth, the SMH, Philadelphia semiconductor space, down 2.68%, $6.57. Pretty good down day. What are we looking at? Go to the weekly chart, and you could make a case. You got a bearish, wedgish situation going on here. It's easy for you to say. Situation going on here. This is a hypothesized thing. It's not point to point. I could go up here. It doesn't matter. You got a bearish thing going on. That means they can go up to the top of that channel or they can break the bottom of the channel. Either way, they haven't done yet either one. But just the point of know where we are on a weekly chart, that's item number one. Item number two, if they continue down, where are they going? Well, you have a gap down here. That's an obvious place, 231.06. We have to know about that place. If they spike the gap, where to? Where would the place be? Coinciding with an area you would expect a bounce back in the other direction, something below that gap. What if they spike that gap? Screw the people buying the gap. Where's the next place? I want to know. Do you want to know? Again, coincides with a 200 period moving average, not the reason. Supporting information or supporting cast members, documentation, whatever you want to say. I've got it at 223.50. Don't know if they get down there, but if they do get down there, for example, this week, I think it's a buy 'em with three hands. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.